Hi everyone! Welcome to UTrade Rundown. I'm Jeri Alfonso, the Consumer and Gaming Analyst at Unicapital Securities, and today we will be talking about Jollibee and why it's going down. JFC is down 12% so far in May because of two main factors. First, the weaker than expected earnings and its removal from the MSCI Standard Index to the MSCI Small Cap Index. Now, let's try to unpack it. First, the biggest factor is the company's disappointing earnings results. JFC reported around 1.4 billion in consolidated net income for the first quarter of 2026. At first glance, JFC's earnings result looks okay. The company still made 1.4 billion in the first quarter of 2026, right? As massive as it may sound, the problem is it's actually 44% lower year on year. 44% is a big drop and investors do not like that. The decline in 1Q26 earnings actually came in below our expectations primarily due to the softer revenue growth. Revenues expanded by only 9%, which is the company's lowest top-line growth since 1Q21 or during the pandemic years. Had revenues grown by around 11%, JFC's 1Q26 bottom line would have been more aligned with our house expectations. So why did profits fall so hard? The main pressure point came from the costs growing faster than revenues. JFC's COGS increased by 12%, outpacing its 9% revenue growth and resulting in margin compression. At the same time, depreciation expenses rose by 7%, while general and administrative expenses climbed by 9%. All these factors drove an 18% decline in operating income. And to make things worse, interest expense and its income tax are also higher for the quarter, making its net income plunge by 44% year-on-year. JFC's first quarter performance may also be an early indication of how its operations could trend for the rest of the year should oil prices remain elevated. Restaurants are extremely sensitive to rising fuel prices because consumers tend to cut back on dining out during periods of tighter budgets. And to add, higher oil prices raise OPEX through increased fuel and kerosene costs tied to logistics and store operations. Now, aside from the weak earnings results, there's another reason why Jollibee has been under pressure these past trading days. JFC was officially removed from the MSCI Standard Index and was transferred to the MSCI Small Cap Index. Now, why does that matter? Funds that track the MSCI Standard Index are required to sell stocks once they get removed from the index. So in simpler terms, JFC is expected to see fund outflows, which naturally adds selling pressure to the stock. And with the MSCI rebalancing taking effect on June 1, the market could continue seeing volatility and possible selling pressure until then. And that's it for this week's UTrade Rundown. For more company deep dives, open a UTrade account today.